Hey guys, this is James and I'm back with another valuation video. Today we are doing ticker symbol BTI, or British American Tobacco. Now BTI over the past year here has been down over 15% under price performance, but with that incredible yield or dividend yield of 9.2%, paying out $2.83 per share of BTI owned, and with it getting close to its 52-week range low right here, with its low being $29.80, I wanted to run BTI through my valuation spreadsheet and to see if I can get something close to what the analysts are saying over here on Seeking Alpha and Wall Street. This is my valuation spreadsheet for BTI, and I will run through the calculator with you. If you'd like to use this calculator and run through it with me, you can purchase this calculator over on Patreon. I do have under the overview tab the explanation of each of the spreadsheets with video instructions. Coming over back to the valuation tab, just answering these questions right here. All the inputs are in the yellow and all the outputs are in the green. BTI is currently sitting at $31.03. Is this a REIT? No. If it is a REIT, we would use these valuation models, but it's not. So we're just going to use the Graham's model, the DCF model, and the dividend discount model. So apply a margin of safety. We're going to click yes. So under the final valuation, this valuation will have an applied margin of safety compared to the average valuation, averaging these three valuation metrics. And applying a margin of safety, we're going to float between a 14 and 24%, but we'll get to that when we come to it at the end of the video. And then once we find if we are a buy or sell right here for BTI, we're going to jump over to Portfolio Visualizer and see how BTI has performed against the SPY since the inception of SPY, all the way back to about 1993. Comparing a 100% portfolio of BTI versus SPY, and I think you're going to be quite surprised. Over here on the valuation spreadsheet for Graham's model, I'm going to show you how I came to this figure right here. The AAA corporate bond rate is 5.48% currently today, so pretty high, and I put a 0% for the earnings per share growth rate over the next 5 to 7 years, and using Graham's model, that's what you should be looking for, is earnings per share growth over the next 5 to 7 years. So where am I going to get that? I'm going to get that over on one of my favorite websites, Seeking Alpha, and you can get a Seeking Alpha subscription. I believe they're running a sale right now. You can get 7-day free trial to be able to get all the metrics for Seeking Alpha and read as many articles as you can for 7 days free. Check that out with the link in the description. So to be able to come to an earnings per share figure for the Graham's model, coming over to the earnings tab and sub-tab earnings estimate. So we actually don't have many analysts looking at the earnings per share growth or estimating that for BTI. So we only have 2 analysts for the ending of this year and 2 analysts for the ending of next year, and only one has predicted earnings per share, at least a prediction, over the next 4 to 5 years. And it doesn't look too good for the earnings growth. Coming down to the revenue growth as well, we do have 15 analysts predicting revenue growth over the next 3 years, and they're saying anywhere from 1.5 to 4% over the next 5 years, and then a few analysts in 2026 and 27, and then just one predicting it out for the next 10 years. So to be on the more conservative side over on the spreadsheet, we're gonna choose 0 for now. But again, like I said, if you download this calculator over on Patreon, you can choose your own number and see what the value would look like here at the end of the video. Moving on to the discounted cash flow model, we can find these figures that we want to use here over on Seeking Alpha, and that's why I like Seeking Alpha so much. It has pretty much anything that you would need to analyze a stock on their webpage. You don't need to flip back and forth between a bunch of different websites. Under the financials and cash flow tab, coming down to the total free cash flow per share, you can see that they did have a jump from December 2017 to 2018, but they did have a stock split between here, and we see that their free cash flow per share almost doubled within 1 year. And then we also need this figure right here coming down to total common shares outstanding. So we're going to multiply the shares outstanding by the free cash flow per share for each year. Coming back over to the calculator, and what I did was I multiplied it out for 2018 to the most current 12 trailing months. If we included 2014 to 2017, that gave us an artificial jump. It doubled the free cash flow, which gave us a growth rate that I didn't like. If we come over to the actual brains of the calculator, looking at the average growth, if I included 2014 through 17 numbers, that would have given me a 14% average growth, which would be telling me that over the course of the next 5 to 10 years, that BTI would be growing their free cash flow 14% every single year, which is just not true. I used more of the recent figures, which came to a number that I was more comfortable with of 1.25% average growth. With that in mind, we're going to use these numbers calculating a value for BTI using the DCF model. Perpetual growth rate, 0.5%. I'm going to stick with that for this being a very long-standing company with not very much long-standing growth. And I chose 0.5% for the perpetual growth rate, 8% for the discount rate, and total cash and total debt on hand. We can again find that over on Seeking Alpha. Coming down to their valuation tab at the very bottom, total debt and total cash. Just make sure you have enough units or enough zeros in there to be able to hit that $1 billion. And last but not least, coming over to the dividend discount model, annual dividend payout and 5-year dividend growth rate. Risk-free rate is a quick Google, 4.63%, and return of the market, I would expect or want around 8% per year, looking over the course of a longer period of 15 to 20 years, expecting about 8% per year. So these two figures right here, this one is a quick Google, this one is subjective, and these two you can find over on Seeking Alpha. Under their dividends tab, dividend scorecard right here, use $2.83 for their annual payout and 2.35% for their 5-year growth rate. And putting that into the calculator and clicking go, we come to $32 for Graham's model, $60 for the discounted cash flow model, and $66 for the dividend discount model. That comes to an average valuation of $53 with a 24% margin of safety applied. That comes to a valuation of $40.62, which is about 30% undervalued compared to its current price, or its current price is 30% undervalued compared to its intrinsic value. Coming back over to the main page for BTI on Seeking Alpha, that does fall in line with Seeking Alpha's analysts and Wall Street's analysts. So let me know what you think in the comments. But before you leave, let's check out BTI versus the SPY, taking 100% BTI and 100% SPY, going all the way back to January of 1994, which I believe was the inception date for SPY in the red. You can see that it's pretty much tracked all the way to, over the past 30 years or so. If you started with $10,000 with BTI and $10,000 with SPY, you would have an ending balance of $195 and an ending balance of $157 with the SPY, with a cumulative annual growth rate of 10.5 for BTI and 9.72 with SPY. So head down into the comments and let me know if that kind of surprised you, if BTI outperforming the S&P 500 over the past 30 years kind of surprised you, and let me know if there is another ticker symbol you'd like me to analyze here in my valuation spreadsheet. And with that, thanks for watching.